Morning all, how are we doing? So I had microphone problems. My microphone decided it didn't want to work this morning for some reason. So, as usual, how is everybody doing? Morning Evil, morning Sarah, morning Danny, how are we doing? Morning everybody else, Neo, Paul, Ismet, Fire, Pot DJ, Virginia, how are we doing? It's election week. Big one, very big one. Morning Barrier Man. Yeah, big one this week. Who knows? Market had a big dump this morning. The US dollar gap down. We don't often see gaps in FX. Quite rare these days to get gaps. But yeah, big. We'll say big. It's half an ADR, but half an ADR is half an ADR. So it's a fairly big movement happened this morning. So this morning I would expect to find. Where's Pandora gone? I would expect to find a gap fill play today, potentially. So normally when we get gaps, go away. Stop trying to sell me your pen. Normally when we get gaps, we get gap fills. So potentially today, be looking for a gap fill play. It seems to be underway already. Whether or not it happens, we'll have to wait and see. But fairly good trade opportunity for gap fills. This one's sort of somewhere in the region of 2 to 1. Either work or they don't. So big gap on Euro US dollar, is it? Yeah, much bigger on Euro US dollar. So Euro US dollar gap is about an ADR, just shy of an ADR. So yeah, big one. Straight up into last week's high this morning and rejecting. So we'll wait and see what happens with these. But yeah, so quite a lot of overnight volatility as you'd expect. Morning, CK. So yeah, we'll see what happens there this morning. We'll monitor that. FTSE off to an absolute flyer this morning. I didn't get any pre-market trades on today because my terminal froze and I had to restart it. So I couldn't get the pre-markets on. I'm just seeing if there was actually a pre-market today. What we're looking for, 88 and 176. Yeah, so that's annoying. So your pre-market range today on the FTSE would have either been that or that, depending on your broker. Well done. Gutted. 92. So yeah, it's easy. Easy 2R out of that so far this morning. DAX not really gone. What did we get on the DAX? 213. Yeah, so DAX you would have been triggered short. FTSE you're long, possibly getting out. So yeah, really nice big break this morning on the FTSE. So looking at the indices, watch this area on the FTSE today. So this is a double weekly low, which we broke. So this will be the first retest of that level when we get just shy of ADR today on the FTSE. On the DAX, whoa, CK, welcome to the private streams. Thanks for subscribing. You don't get that noise, do you? I get this dude noise that goes off in my ear. Thanks for subscribing. Welcome aboard. Go and consume all of the content. Good luck. You'll be there for a while. Next member stream is tomorrow. So yeah, DAX as well. Watch this area here. So again, double weekly low, which we broke through. We did kind of retest that quickly last week. But this morning, quite possibly could be rallying. So stock indices tend to rally on the election. So bear in mind this week, it's obviously election week. What we've got this week is the potential for the Nasdaq, the DAX, the Dow. Sorry, the Nasdaq, the S&P, and the Dow to really, really take off. If you go back and look historically at previous elections, you tend to get some massive, massive movement. The sort of thing where if you get into an opening range breakout and it goes, just shut your terminal and walk away and come back quite a few hours later. You'll find well over 200 ADR sometimes on these. I've done a quick analysis of it over the weekend. It's massive volatility basically, and not something you can predict. It's just, it will either fly or it won't. So DAX, I'm just take the 5-minute ORB today, whichever way that decides to break. FTSE is obviously way too big. So we've had 292 or 29 points. 20% of ADR is 17. So way too much on that 5-minute opening range candle. Probably going to exhaust itself this morning. So we'll look through the FX pairs today. So there's a slight change to the live rooms I've made, just to let you all know. So if you haven't looked already, I'll put a link up in the chat. That's the new live room schedule. So obviously now I've got the members streams, which we're doing a lot of strategy development. We've done a lot of education in there over the last month. Most of the core education kind of streams that I wanted to do, I've kind of done. I've got quite a few others planned, but most of the core stuff is kind of done now. It would help if I just open up the member streams. So there's loads of content in here, which is all to do with price action, indicators, strategy development, how to do testing, all this sort of stuff. So there's loads of content up there over the last month. So the feedback I've had is good. Obviously, people are loving it. But the problem is there's too much content. Each of the videos that each of the member streams that I'm doing is around about an hour and a half to 2 hours. I was trying to keep them down under an hour, but it's very, very hard to do anything in detail, if you like, in under an hour. So what I've decided to do is drop it down to a couple of streams a week for the members only streams, but they'll be as long as they need to be. And then people can consume that stream as they can. So the problem people have been having is, obviously I understand people can't make the streams, so they're watching the replays. And it turns out that the majority of people are watching the replays rather than attending the streams, which is nothing wrong with. The difficulty is if you've got a 2-hour stream to watch, by the time you get home from work, if you're working, or by the time you get around to watching the streams, it's a lot of content. And if I do it every single day, people just are doing nothing but watching or trying to watch the streams, the member streams, and you just can't consume that much content. So what I've decided to do is knock it down to 2. So we'll do Tuesday and Thursday at 8 o'clock in the morning rather than 9 o'clock. So basically we'll be trading the DAX in them as well, but we'll be concentrating on obviously the members content, which is mainly strategy development. Then on Mondays, we'll do what we're doing today, which is an analysis of the week coming up, and we'll trade obviously the FTSE and the DAX. Wednesdays, I'm going back to do an afternoon session because all the people from New York missed me apparently, because I haven't been doing any New York streams for 6 weeks or so. And so I thought, well, we'll do an afternoon stream. Then we can do the NAS and the Dow. And then obviously a midweek analysis. And then on Friday, an open session for everybody, members and non-members, which basically covers whatever we want. Yeah, because the thing with position trading is you don't need to look at your charts every day, do you? Obviously, if we get into a position, the average time we spend in a position, or I spend in a position usually is sort of 3, 5 days, 7 days, whatever. It's swing trading, isn't it? So there's no point in me going through everything every day because we cover the same stuff every single day. So big look at everything on Monday makes sense. We'll go through all the news coming up for the week, prepare, plan, know when the volatility is coming, look at where everything is going, that sort of stuff. Wednesday, have a look at what's happened on Monday and Tuesday and Wednesday morning. And then Friday, we'll have a look at the week. So that seems to me to be a much more organized way of doing everything. Analysis is the most important thing, what's coming up fundamentals, because we know that fundamentals drive the markets. So that Monday session and the Wednesday session, we'll have a look at all FX pairs, have a look at setups that have happened, have a look at what's opened, what's closed, that sort of stuff. And then Tuesday and Thursday we'll be concentrating on strategy development. So there we go. So that's what's happening now this week. And obviously, if I keep it all the same every week, everybody knows where everything is, and then you can either attend what you can attend or watch replays of what you want to watch. Makes life simple. Euro US dollar's taking off again. Apparently, I've hit one of my goals for the day. Don't think I have. Right, let's just see if we've got a break on the DAX. yeah, short DAX. So if you took the pre-market on the DAX, you will have already triggered short on the opening range candle. Quite a heavy sell-off pre-market. Totally the opposite on the FTSE. Look, really weird today, going in completely the opposite directions. So downside target on the DAX. Watch this previous day's high from, or that previous little pullback there, really, from Thursday, which is that propulsion move that we went into on Friday. So watch that for additional entries long. I'll be out at 5R down there. We're kind of in the middle of nowhere at the minute, in no man's land on this 3-day drop that we had on the DAX. So this area, obviously, as I've pointed out already, is an area of interest to the upside. So if it does hedge, I'll be watching that propulsion gap basically for an exit. But hopefully we'll just clean break down to the downside. And nothing on the FTSE today for me. But if you took the pre-market FTSE, you're out, but pretty much, aren't you? That's 3R. So you've had 3R already. So you're out. TP1's hit. TP2 will be somewhere up near ADR. Good moves. Right. So let's look at this week's news then. So morning update.news. JC, good morning. So over the weekend, there have been missiles flying around, but the news basically this weekend that I've seen on the television has not mentioned Iran or Israel at all. It's all about the floods in Spain and what's going on in the elections. So I've been watching Financial Juice flying past. It's very difficult to tell exactly what's going on over there at the moment, but obviously I'm assuming there's still Middle East tensions. The market's really not going to pay too much attention to that this week because obviously it's all about the election. So I'm not taking any new positions at all this week. I'm going to wait for all these elections to blow over. The problem with the US elections is you don't know the results until whenever you know the results. We get an idea within 24 hours. So for us in the UK, Wednesday morning, we'll probably have a good indication of who's likely to win, but the counting's not going to be finished for days. So there's a hell of a lot of volatility this week. It's not really worth trading. You can make a lot of money if you get a position right. But if you get, it's got to be stop-based trading this week. So if you're getting into anything without using a stop loss this week, you've got a chance of making a hell of a lot of money. You've got a chance of losing a hell of a lot of money. So just be aware, this week is kind of one of those weeks where it's fun to watch, but it's not fun to trade. However, it can be incredibly lucrative. Obviously, the only way we make money as traders is on volatility. This week is the most volatile week we're going to have. So yeah, be prepared. But changing our nuclear doctrine is still on the table. Nice. Iran talking about nuclear war. Lovely. So as you can see over the weekend, there's not really a lot of other news that we've had coming out. So OPEC's some oil news, but that might actually affect the Canadian dollar. December oil output increase. Okay. So potentially a drop in oil price, which will be weak for CAD. So yeah, apart from that, not an awful lot else happening. So this week, obviously the clocks have changed again. So if you've changed any of your timings on any of your EAs, make sure you put them all back, because it's all back to normal now. Today is a bank holiday in Japan. Now, typically on Japanese bank holidays, we see a lot of movement in the yen. This week it's going to be today rather, it's going to be quite difficult because we've got these massive gaps happening in the US as well. So tricky to know whether or not we're going to get that this week, because typically what happens is when we've got bank holidays in Japan, the US markets take advantage of it and we get a lot of movement on yen pairs. However, the market's not going to want to do an awful lot this week at all. Yeah, the markets, I would say the banks, institutions have exactly the same outlook, I think, as I do. We sit here and we wait and see what happens, because anything that you do this week, technical analysis goes out the window, fundamental analysis goes out the window. Everything that you can do from an analysis perspective, trying to predict where this thing's going to go at random, is out of the window, because it's all going to be down to what happens in the US election. So be prepared for potential volatility on the yen. But obviously tomorrow we've and this week we've got so much going on with fundamentals with interest rates, and that's all coupled with what's going on in the US as well. So we'll do a quick overview of what we've got. 3:30 tomorrow morning, we've got the Australian rate announcement. They're forecasting not to change again. CPI came down nicely for the Aussies, so there is a good probability we will start to see those decreases coming in. At the moment, we're forecast not to get one. After the decent CPI numbers last week, there is a possibility that could come out red. They could actually go with maybe a 0.1, because they are known to go in 0.1s as well, or maybe a 0.25. So there is a possibility for an upset on the Aussie tomorrow morning. We've then got the PMIs tomorrow for the US dollar. And obviously the elections are all underway. But as I said, we've got the elections underway, but we're not going to know anything until the exit polls start to give us some information. And obviously, as you know, with the states, it works on a swing state basis. So there's 7 key states basically that decide the election. And at the moment, until those come out, no one's going to know anything, and it's going to be tight. So the markets will swing as they get information, because they will probably want to go bull if Trump's getting in and bear if Kamala's getting in. However, after the run we've had on the US dollar, I think it's much more likely they will just want to unravel as much as they can, as quickly as they can. So they could well use all the election stuff just to put in some big profit take moves. But, you know, again, we'll have to wait and see. So that starts tomorrow. And obviously throughout the day, from then until sort of Wednesday lunchtime UK, it's going to be holy crap. Obviously, the other thing you've got to bear in mind with this is what happens if Trump doesn't get in. Now, we know, obviously, we've had riots and they stormed the Capitol building, etc. The shops already being boarded up in Washington. You know, businesses are closing. They're getting ready for riots, basically, already. So any civil unrest is going to be negative for the US dollar. Yeah. So economy's shutting down, civil war, potentially. I mean, it's not going to get that bad, but all that sort of stuff is all negative US. So it's an absolute lottery, but you've got to be prepared for everything. And obviously the best position is that. Sit on your hands, do nothing, watch it unfold. It's very interesting, but anything you put into the market, you may sit there with a position on and it goes like this, and it then will go like that. Yeah. And it's either going your way or it's not going your way. The thing that you've got to be aware of as a retail trader is the thing that's going to kill everybody trying to trade anything this week most of the time is slippage. Yeah. If you've got an order that you want executed at that price point, I don't care whether it's a stop loss, a TP, a pending order to get in or out, whatever it is, you're not going to get it. If you're going to get spiked and your trade is going to trigger in any way, shape or form during any high volatility, you won't get the price that you asked for. You'll get something. You'll get whatever the broker can give you or whatever the broker wants to give you based on how much money they're going to make. So this is the thing that kills you during these times is the slippage. You can get slipped by an ADR very, very easily. And the difference between an ADR losing 1% of your account, losing 2% of your account is big. Yeah, and it causes revenge trading. So it's best just to watch it. Then well, you can't lose money, can you? The market's not going anywhere. It's still going to be here on Thursday. Yeah, when everything might start to calm down. It's just today, tomorrow, and Wednesday. Best thing to do is just watch it unfold. We've then got the New Zealand dollar unemployment rates coming out. Unemployment is forecast to go up in New Zealand. That's not going to be good because it means they can't drop their interest rates. So potential bullish movement on the New Zealand dollar coming on Tuesday in the middle of the night. But again, whether or not anything is affected by news this week or not, you just have to wait and see. Everything's going to be watching this. So, you know, if the markets want to make a big move on the New Zealand dollar, they're certainly not going to use the US dollar to do it. So whether it moves or not this week, we'll just have to wait and see. It's going to be a very odd week. Wednesday, very, very quiet. So there's no news coming on Wednesday, but the results of the election will be. So although we've got no scheduled news apart from PMIs for the pound and the US dollar, we are going to get some results coming in from the US. And if it starts to look like a Trump win or starts to look like a Trump lose, the market's going to be affected in some shape or form off the back of that. We then move into Thursday. So Thursday's when it should start to calm down from a volatility perspective, but then we pick up from a volatility perspective because we're dropping the interest rates on the pound. So we've got unemployment claims coming through as well on Thursday afternoon. And then we've got FOMC, the interest rates for the US. So from a normal news perspective this week, we've got an interest rate change, an unemployment figure, followed by an interest rate change and an interest rate change. Yeah, it doesn't get any bigger than interest rates. We've got 3 out of the 7 released this week, along with the US elections. Yeah, it's just a atom bomb basically waiting to go off in multiple directions. Yeah, so just be aware of all of this week. It doesn't matter what I say about technical analysis this week or what you think about fundamentals this week. It's just going to do what the hell it wants to do. It's not unknown for us to get pauses in stock markets and stuff when this sort of thing happens. You know, it's just a nutty week, so be aware. But Fed are dropping rates. Bailey is also dropping rates for the pound. So there's potential weakness coming on both of these. But obviously what that weakness is for the UK is going to be based on that number there as to how many are actually wanting to drop rates fast and hard, because that will give us an indication of what's coming next. And with the FOMC, it's the press conference. So somewhere around about 7:45 to 8:15, you tend to get all the volatility coming in on the US dollar. So we're expecting that. We're expecting that. As long as we get those, we'll see some whipsaw. And then we will see, obviously, the big move start after the FOMC press conference. And again, I don't know that they would move the pound too much until we've got that out the way, because obviously the US dollar affects absolutely everything. So we then got the Canadian unemployment rate on Friday. Yeah, so interest rates, inflation, unemployment, GDP, the 4 key drivers of market movement all this week on pretty much everything. There's nothing really this week that hasn't got news. I mean, obviously the Swiss and the yen, but they're safe haven currencies. So everything else has got news coming out this week. Euro is light. So Euro pretty much is the only thing we've got no news on. But obviously that is going to be driven by everything else. So yeah, mental. It's going to be a mental week. So at the moment I'm holding my, so I got hair. I'm holding some US dollar shorts at the minute. I will probably get out of what I can get out of today. But wait and see what happens today, basically. At the moment, obviously, with these gaps, when you get a gap like this, typically after a gap fill, you get a go, which is why you probably heard the terminology gap and go, yeah? It's used in stock trading a lot. When you get a gap, there's a reason for it. Typically, if you get something that closes there and opens there, it's because they've bought a lot of it. Yeah, or they've sold, in this case, a lot of US dollar. So over the weekend, we've had a lot of exiting US dollar positions. Remember what I was saying about, obviously, with this rally that we've had on the US dollar? Yeah, the market cannot make money unless it exits the position that it's taken. Yeah, so the whole way the market moves and why market structure exists is because if you go short, to exit, you have to go long. You take the opposite trade. Yeah, if I buy something, when I press the close button, I'm effectively selling it. So I become a seller. When I exit a long, they are long as you like. We are also up at a previous monthly high with the election. So they're sitting on an absolute bucket load of cash, and it's either going to get better for them or they're going to lose it all. Yeah, we've had a gap down basically, which indicates that the market is starting to sell off a portion of this. Today, we could have a catastrophic exit. Yeah, climbing up the stairs, falling down the elevator shaft. I'd be very surprised if we put a 300 ADR move in the day before the election is starting, but you know, so I'm holding at the moment some positions short on the US, and I will see what happens today. If by the end of today we've done that gap fill and we've gone nowhere, I will be having stop losses put in place. And it will either stop me out and I'll take a loss, or it won't. But if it goes that way, there's an opportunity to make a hell of a lot of money. Yeah. In trading, doesn't matter what you think, what you do. The market is what decides how much money you extract. Yeah. So I don't care how good your system is, how good your strategy is, whether you love market reverse alerts, market structure, whether you use support resistance. Doesn't matter how you get into the market. It's what happens after you've got into the market and where the market moves, how fast it moves, and how far it goes. That's what determines your P&L at the end of the day. I've got a load of short exposure on the US dollar. If the US dollar collapses by 3 ADR in the next 3 days, I'm going to make a lot of money. It's nothing to do with my skill set. It's just to do with the fact that I've got the right direction on at the right time and the market's starting to move. Yeah. So you have to take advantage of the situations you have available to you. At the moment, I've got a big short on with a high probability of working out because of the speed of movement we've had against it. It's going to want to do that at some point. Hopefully, it's going to do it in the next 3 days. But if it doesn't, got to get out. So this week is just nuts, absolutely nuts. From an interest rate perspective, we've got unemployment rates, we've got the election. It's just going to be absolutely crazy. So so we'll see what happens this week. I've got losses to make back from last month as well, so we'll see what happens with the direction they decide to take it in. But this morning so far, we've got a very nice initial sell-off. So if this does gap and go and we don't get the gap fill, it's looking good. So we'll wait and see what happens. But just be prepared for a bomb. Yeah. It could go off at any time. And go back and look at previous elections. You know, so it's one of those things. Actually, it's probably good. I don't know if I've got enough data to go and look at the NASDAQ on this terminal. But if you've got data back to 2020, yeah. That's 2021. Where's 2020 gone? November. I reckon it's there. Yeah. I can see it on the chart. That's the last one, yeah? Look at normal price action. This is normal daily candlestick size. Yeah, there's a normal daily candlestick. Bang. 2 days. Absolutely huge. So your average daily range, I'm just going to pick one of these, a couple of these candles, is around about 224. Yeah. Election, we got 618, followed by 410. Yeah, followed by, so, you know, this is what I mean by a bomb going off. Yeah, 3 ADR is not out of the question at all on everything. Yeah, so when you look at the ADR dashboard, yeah, this thing will just be red everywhere. Because the other thing you've got to bear in mind is when the US dollar moves, everything else moves. So everything is crossed with the US dollar. 50% of all transactions go through the US dollar. So if the US dollar goes completely mental in one direction, all of the other currencies will be affected, because if you're buying a load of US dollar, you've got to sell a load of pound, euro, yen and Swiss, New Zealand and Aussie to buy that. If you're going to sell a load of that US dollar, you've got to put that US dollar somewhere. You're going to put it in the pound, the euro, everywhere else. Yeah. So when the US dollar moves, everything moves, which is why on non-farm payroll, you see Aussie dollar, New Zealand dollar go mental. It's not because anything's affected the Aussie or the New Zealand. It's because they're pulling money in or out of the Australian and the New Zealand to affect the US dollar. Everything is interlinked in Forex. So yeah, bear that in mind. Obviously, it's not going to be just positions in the US dollar that are going to be affected by this potentially this week. So, yeah, so that's obviously what we've got coming up news-wise. No idea where anything's going. You have to just protect what you've got. And if you have got nothing, stay with nothing. If you want to trade, and one of the other things you can do this week as well, if you want to trade and you want to experience it and play with it, that's fine. Just reduce your risk by 75%. Yeah. Get into some US dollar today. Pick a direction, long or short. Get in. And get in with a tiny lot size. Put a 1 ADR or a 2 ADR stop on it and see what happens. But just be aware, obviously, anything could happen this week. Morning, Church. Plus, we'll have to see what the losing side will do afterwards. Yeah, I mean, if Kamala loses, it'll be very dignified, probably, and normal, won't it? If Trump loses, look at what happened last time. Yeah, it's just the Trump supporters are the gun-toting crazies, aren't they? The Democrats are, right, well, we'll sit down and we'll discuss it. Yeah, this is totally different, isn't it? When you have one person winning and another person winning, it's just it's going to be like chalk and cheese. The fact that half of Washington is boarding up its windows at the moment kind of gives you an idea what they're expecting, but they just don't know who's going to win it. And this is the thing, it's so tight. It's one of the tightest elections they've had for an awful long time. And, one of those things that could explode. We've got some power coming into the US at the minute, look. So US dollar rallying. Swiss franc rallying by the looks of things as well. Got to move on the Swiss franc. Actually, no, that's not the US rallying, is it? That is pound weakness and euro weakness coming in. That's a weird move, isn't it? But we'll go through all the FX pairs in a minute. So yeah, busy day, busy week. Are you out of all US pairs? No, still got your exposure, and I'll go through all the pairs in a minute. I see you have some scary looking big aggressive positions on US CAD. Yeah, two reasons. First, I've got loss to pay for from last month. So I've taken a 22% hit over the last month, basically, which is fine. I have months like that. It's just this month has been annoying in the way that it's happened, or rather last month. And the US dollar CAD positions will get me out of that, basically. But obviously there is an opportunity to make around about 10% loss as well. So it's the thing with trading is when you're in a position and you're getting aggressive drawdown control positions on, you've got to basically weigh up what you want to make out of those aggressive drawdown control positions, as well as the risk involved in taking them. So for me, if this thing drops by an ADR, basically, US dollar CAD I'm talking about only here at the moment. I'm in profit on the positions that I have on at the moment. If this drops basically by an ADR today, that gets me back around about half of last month's loss. That's it. So, but it gets me back half of last month's loss. And then I can obviously reset and move on from there. So yeah, it's scary. I've got in tight and hard on this, and the reason being, like, when I talk about aggressive drawdown control, yeah, all the videos I talk about aggressive drawdown control, I say the best place to take aggressive drawdown control positions is at a previous support resistance area. We are massively extended. We've had reversal alerts going in for the last few days. The market is starting to roll over. It has managed to continue to make higher highs, but we are starting to find resistance up here. This is, if anywhere, where it's going to happen. If it doesn't happen, it doesn't happen. I'm out. I'm going to make a loss on it. But if it does happen, there's an opportunity to make the money back. This is exactly the same as the US dollar yen. If you remember the US dollar yen, just to talk you through the US dollar yen, what happened with the intervention, for those of you who don't know. So I got stuck in a squeeze here. On the US dollar yen. This move here, I don't know exactly where I was in, but it was a very similar sort of thing to what we've experienced this month. It was a month-long move where I was anticipating, actually I was in before that, wasn't I? I was in back here somewhere originally, and I got out on that. Got in again short, expecting a continuation. It didn't happen. No, it wasn't here. Sorry. Am I talking rubbish? No, it was here. Yes, it was here. Sorry, it's the first intervention, the failed intervention. So it was here. So it's this, because I got in at 150. Got in short, got stuck, didn't move anywhere for weeks on end, and then it took off. So we were scaling into it, and as I got to here, I said, screw this, I can't hold it anymore. Yeah, and I bailed here with just over 9% loss. Couldn't hold the position anymore. It was going too far. That 150 intervention play had failed and it was accelerating. So I called it. I said, I'm getting out. I can guarantee you guys within the next 24 hours, that thing will be giving me an exit, because it always does. It's the way it happens. This is why they call it a squeeze. When you've squeezed the longs or the shorts to a point where they can't hold anymore, there's no one else left to buy or sell. It has to unravel. And it's just the way it always works. Literally within 1 hour of the stream, or was I think it was even live on stream, wasn't I? Bang, we got the intervention. Yeah. And it always comes after a big, strong move, typically. And this move here is the exhaustion move. Yeah. It's basically the slippage created by the lack of sellers and the volume of buys that the market wants to place. We get a slip. Yeah. And that's basically exhaustion. That's how you can identify it. Then the intervention came in, and obviously we had that move there, which was somewhere in the region of 5 ADR intervention, and then it pulled back, and I said, right, I've made a 9% loss here. I'm going to get in short, and I'm going to get in short heavy, expecting a second leg, and that is the one that I made 11% on. Yeah, but the play wasn't anything but a high risk trade with high probability. We've just had an intervention. They said they were going to intervene. They did the intervention. So my gut instinct was, if the intervention is going to work, we're going to get exactly what we've had every other intervention, which is that end pattern reversal. And that's exactly what we got when you look at it on a lower time frame. Yeah, I was scaling in here, if you remember. And that is where I made the money. That is where I lost all the money. Yeah. So it was actually for 6 weeks. I was stuck in this thing here for 6 weeks. Yeah. Just going sideways for 3 weeks. I got in somewhere back here and I was like, oh, it's starting to work. No, it did not. And then we sat around for weeks and weeks. And then we ground for weeks. And I said, screw this. I can't hold it anymore. Bang. Next day. So it's exactly the same play. I've made the loss on the US dollar CAD. And I have aggressive drawdown control positions on. If the aggressive drawdown control positions work, I'm going to make all the money back. Not all of it, actually, but it depends. I don't know where it's going. But it's the same play. And if that hadn't worked out there and it had continued to grind up, it would have been another big loss. But you've got to look at the probabilities in trading and go back and look at why this market moves and how it moves. When you have a stretched, squeezed market like this, you don't have any more available buying power in the banks and institutions. Yeah, they have to get out of the trade. They have to take the profit. If you're a bank and an institution sitting on a massive amount of capital in P&L, open P&L, unspendable, unreportable, unpayable P&L, and you have a massive market moving event coming up within 24 hours, would you take all of that money and buy a couple of Ferraris, or would you hope that you can buy 3 Ferraris? Yeah. So the probabilities of the pullback at support resistance, double resistance, after an extension of that size are highly likely. Yeah, this level doesn't get hit very often. When it does, go back in history and look at what happens. We've got a catalyst to move the market. Yeah, we've got a catalyst to move the market coming up. This is where we are here. After that, either works or it doesn't. If it doesn't work, it costs money. If it does work, it gets you out of trouble. So these are things you can't do in a simulator. You can't do with EA backtesting. This is the stuff that analysis is about. Being a trader is about identifying these sorts of opportunities, but also risks. High risk, high reward. That's what it is. Morning, everybody else. I haven't said good morning to. I got out of US dollar CAD with a small profit. Cool. Stay there. Stay flat. Didn't want to wait for the gap fill. Yeah, I had an opportunity to exit this with 5K this morning. I opened up my charts this morning on my US dollar CAD. It was in profit by 5K. I decided to leave it on. Was it the right or the wrong choice? Don't know. We will see. We will find out today. It's either going to gap fill or it's not. I think there's a high probability of a gap fill. However, this is, you know, when you look at what we've got going on at the moment this week, there's so many. Hang on a minute, we don't usually get gaps. Hang on a minute, we don't usually have 3 interest rates in 1 week. Hang on a minute, we don't usually have a US election hanging over us. Hang on a minute, we haven't got a Middle East conflict going on normally. There's so many things that could have caused this gap. Hang on a minute, we don't usually have gaps after a 1 month rally with 2 down days in it. Yeah. To me, this looks like the market starting to do the sensible thing and get some of this size off. But, you know, nobody knows. People in the banks know. But we're not in the banks. Flat now and staying next flat till Monday. Yes, same. As soon as I get flat, I will be flat until Monday. I remember the move started while you were live. Yeah, it did, didn't it? I think it might have been Virginia that shouted, "Look at the yen" or something, and we were basically in here, and the intervention happened. Yeah, if you go back and look at it, if you want to watch that stream from when the intervention happened, you'll see my reaction. You can see literally the money flooding out of my body. Where do I put my stops on the US dollar CAD? I'm not using hard stops. Where will I put them? Be above the high. Up here somewhere. I won't use hard stops until I know what's happening today. Today we could be down here and there's no need for them. But if tomorrow, when I look at it, we're still floating about, that's when I'll put them on. Basically, a lot of this movement that we're going to experience on this US dollar CAD, on all these US dollar pairs, basically, is going to be happening while I'm asleep. Yeah. So obviously the elections kick off tomorrow. We've got a load of elections voting that's already happened in the US, because obviously they can postal vote and electronic vote and everything before the actual polling day. So there is already votes to count. So it's how quickly these kind of swing states really declare and get announced, and whether there's recounts. You know, there's so many things that go on in this election, and when it is so tight, I can guarantee you they'll be calling for recounts on some of them. So I'm going to be asleep when really it all kicks off. We'll be waking up in the morning and going, what's the news saying? And they'll be like, it looks like a Trump win, or it looks like Trump's lost. But I will put stops in place when I go to sleep. I'm watching it like a hawk all day, every day while I'm awake. Yeah, I've got a laptop which I have downstairs with me, which basically has got the charts open while I'm watching the telly. So I'm keeping an eye on it constantly. Most annoying thing for my wife, on a Wednesday evening, once a month, she's like, "Why have you got those charts open again?" It's FOMC. Got to watch it. It's very important. Right, so there's your news. We'll obviously see what happens this week, but you know, it's not a week for taking new trades. Hedged on the DAX. So DAX targets for me today. Propulsion to the downside is good. 5R. Upside. I'm going to look for that little high retest there. So we had a propulsion move which broke through those lows. We retested that. So I'll look for a retest of that area to the upside. But looks like it's going short today at the moment. Typical, isn't it? The one that I didn't get on because my terminal froze up is the one that would have paid me today. So that, if you did take that today, what was it? 90. You've had you're just shy of 5R on it. So you've had 4.5R out of that. So unfortunately that today would have paid for the hedge, but not for me. Right. So looking at ADRs and everything today, you've only got one ADR so far, which is New Zealand dollar, US dollar, and that will be to do with the gaps. So as you can see, I've got out my New Zealand dollar, US dollar on Friday. So I'm flat on that one already. The which is annoying because obviously it's gone further. But this is obviously a bit of a ropey ADR. We gapped up. And obviously this is kind of, let's see what the spread candle was on this morning. It's probably massive. Actually, it's not too bad. So yeah, this is just a big gap up today. So whether or not that is, I mean, it just so happens today that it is exactly hit ADR and bounced off. I could take a screenshot of this, put it on social media and go, hey, look at the ADR indicator, everybody, it's the Holy Grail. But it's not, it's just coincidence that it's actually come off that line. But that is the ADR today. That is your average daily range, and it has hit it and it has retested. So if you did take that, well done. But anyway, don't think that's really a decent ADR to look at today. RSIs flat. Yeah, so everything that has been moving has been the US dollar. It's just basically nothing is really extended. We didn't get too many real big extensions last week. I had the EA turned off all of last week. It wasn't taking new positions anyway, so I haven't got into anything new. But we'll go through all the pairs this morning. We'll look at where everything is, but with a pinch of salt, knowing that this week is going to do what the hell it wants anyway. Morning was check. You're going to have to teach me how to say your name. Can I copy that? Yeah, I can.
Confusing things, including from football that many get wrong, so make sure to stay tuned to the channel. For reference, in Polish, it is usually said as Wojciech. In English, generally referred to as Wojciech.
There we go. Morning, Wojciech. I got your name right. I have to do that with so many people's names because I just can't pronounce them, especially the ones in Russian. Impossible. I don't even understand the letters, let alone how to pronounce them. Right, so we'll start at the top. I'm going to whiz through all the pairs. We'll have a look at where everything is. Yeah, member streams tomorrow. For those that are coming, basically, that's the scheduled one. So we're going to look at the permutation test on Phil's lazy trader strategy tomorrow. I've done a load of permutation testing on it. However, Evil has pointed out that the permutation tests don't match up with actual tests that you run in the strategy tester. So there seems to be some weird glitch in the testing. So I'm going to spend today trying to figure that out. And run some retests. I've done some testing on the Swiss Army Knife EA, which is what we've used to build that strategy out, and it works absolutely fine. Don't have any discretion in there, any discrepancies, and it's all fine. It's something to do with that strategy, and I haven't figured out what it is. So that's my job today, is to figure that out. But tomorrow we're going to spend some time testing that strategy in a bit more detail and figuring out what to do with it. Thursday, we're going to look at a fib retracement strategy for trend trading, which I've not so much nicked, but it's a standard fib retracement strategy, which I've put my own kind of spin on, which seems to be very, very good. And it's very similar to this in reverse. As you'd expect, this works really well on Swiss and yen pairs. Doesn't work very well on anything else. So we're going to go through that as well, which is a really nice trend trading strategy, which I want to have in my portfolio. I want to have a trend trading strategy moving forward for diversification. And that looks pretty good. So that's what we're covering in the member streams this week. I think he's from Poland. I think he is. Close. Oh, I'm not. See, I even got it pronounced by Google and it's still not right. In Polish, W is pronounced harder, closer to V. Okay, I'm still not going to be able to do it. Voj. Anyway, let's do some analysis. Right, so Aussie dollar CAD. Obviously, at the moment, everything is Vozchik. See, I can't pronounce it. We don't have letters like that in the UK. They just don't go that way round. It's impossible for us in the UK, unless we speak Polish or something else. I'll get there. So Aussie dollar CAD. At the moment, we are quite sideways on this, as you can see. Not an awful lot of movement going on. The Aussies, obviously, we had that CPI figure come out last week. If we go back and look at the previous weeks, everyone's trying to pronounce it now. So the Australian CPI last week was down on forecast, not by a lot. They were forecasting a 0.7. We actually got a 0.2, so it's pretty much there. The 2.1 on the year was the surprise because they got the yearly forecast wrong. So that's come down a lot further and faster than anticipated, meaning that it gives them the opportunity to drop those interest rates, which is what I mean. They're forecasting a 4.35. However, the CPI numbers last week are virtually to target, and there is a good chance that we might get a drop. So with all these Aussie pairs at the moment, the stance at the moment is neutral because we've had no interest rate drops coming. They've not said they're going to drop interest rates, but as of last week's CPI numbers, I would say that needs to be bending down a little bit now, and potentially a much faster drop from the Aussies. So this week, you can see the market is starting to turn, and that's pretty much correct. We should be looking more short than long on the Australian pairs, I think, moving forward. So where we are at the moment, obviously, we've got a gap fill to the upside, which looks like it's trying to fill. But any ADR hits to the upside, any RSI extensions to the upside, good-looking shorts on this one at the minute. But as you can see, it's been very, very, very sideways. Those CPI numbers last week, sending it into a breakout, and obviously this is potentially now market structure short. So structure on this obviously went short and confirmed. So we're looking for short opportunities ideally on this one. Bear in mind though, the Canadian dollar is going to move with oil and with the US. So this week anything can happen. Aussie dollar Swiss, very much the same. Swiss franc at the moment, again, pretty neutral. Their inflation has come down way faster and harder than they were expecting it to as well. So when you look at the Swiss numbers, CPI there month on month, they went negative. Yeah. So this isn't what they want. Yeah, they don't want this coming down that fast. So they're going to have to drop interest rates again. They're only on 1%. So the Swiss bearish at the moment. However, as with always with the Swiss franc, it's a safe haven currency. If things start to go wrong everywhere else, so let's say for example we have a massive riot kick off on Wednesday in the US because Trump loses, the National Guard are called in, and all of a sudden there's a load of fighting breaks out and there's a micro civil war starting. The Swiss franc is going to go through the roof. Yeah. So this thing will be down 300, 400, 500 ADR because it's a safe haven. That everyone will be pulling all their money out of the US dollar and they'll be chucking it all into the Swiss franc and the yen. So just this is a beautiful thing for shorts at the moment because we've got potentially the Swiss franc going to weaken, but the New Zealand will probably weaken faster because it hasn't had any interest rate drops yet. And the market, as you can see, is now starting to factor that in. So shorts again there. Aussie yen, nowhere. Nothing. None of these yen pairs. I'm still not interested in anything yen based. It's just not moving, is it? As you can see. So all the yen pairs, you're basically looking for range high, range low, bounce plays. That's it. And don't expect to get more than an ADR out of it at any time. So it's a very, very tricky thing to trade at the moment. All the yens. Again, yen could go absolutely anywhere at any time. So just be aware. All these yen pairs, I'll whiz through them all together. They're all very much in the same boat. Very, very, very sideways. So after the intervention move, we've had the big pullback on the intervention, and now the market is sitting there shell shocked, going, right, what do we do with the yen now? So the main thing you've got to bear in mind with this yen is this is the first intervention we've had with interest rates changing in 20 years. It's the largest intervention we've ever had. And they are no longer buying overseas bonds as a means to control yen movement. So the chances of intervention in the future are less likely. So where this thing goes from here, don't know. It's almost as if you should really call this a different currency. It's not the same currency as we had before that intervention. Yeah. When the Japanese started changing their interest rates for the first time in 2 decades, everything changes because they've been a negative interest rate differential, meaning that we've been a carry trade on it. The carry trade is not there anymore because they're increasing interest rates. It's still there because the interest rates are still only 0.25%, very, very low. But they are now using interest rates to control inflation, which means that it's going to change. So they've become much more of a normal currency. So whether that remains to be a safe haven moving forward, we'll have to wait and see. I suspect it will because there's still very low interest rates and it still moves very, very slowly. But we'll wait and see. The market, as you can see, after that is like, right, what the hell do we do now? They just don't know what to do with it. So it looks to me like they are trying to carry on as normal and use this as a carry trade instrument. Whether or not the Japanese will kick that into touch, we'll just have to wait and see. So at the minute, for me, the yen's difficult to call as to what the hell to do with it. All of the yens. Yeah. So you're going to get pushed around by the other currency. Yeah. So if the Swiss is, I've got a Swiss yen short on at the moment. So the Swiss, which just missed my target. Thanks. So the Swiss, obviously, if it becomes weak, that will come down. If the Swiss becomes strong, that'll go up. But it won't be because the yen's moving. It'll be because the Swiss is moving. So with all the yen pairs at the moment, you kind of need to look at them all with a view of what do I think the other currency is going to do? Do I think the euro is going to dump or pump? That's the direction you trade it in. Bear in mind with all of these, the carry trade is there. So if you short it and you get stuck in it, it costs a fortune to hold it in swaps. So very, very hard to trade. As I say, I'm looking at this strategy at the moment, which I've back tested over quite a period of time, and it's very, very profitable. I really don't know if it's going to work in the next year because I can only backtest over what has happened historically with the yen. I'm not sure if this is the yen that we know and hate or love, depending on whether you trade it or not, anymore. So it's a tricky one. The Swiss franc should remain the same. They're still neutral. They're still not in NATO. They're still going to be this central banking hub where we go and put our money when we have any problems everywhere else. That's not going to change. The yen, however, possibly. So all of these, really, you've got to look at, you know, when I say about the other currencies, what's driving it. Last week we had a big dump on the pound because of the budget. That's what that was. This isn't the yen rallying. This is the pound dumping. So it's the currency cross, which is what's going to drive the direction on this, not the yen at the moment. So all of these, you kind of need to look at where you think the other one is likely to go. New Zealand, obviously, this is the worst thing on the planet. Look at this monthly range, yeah? That's the previous month's range. That's last month's range, yeah? So far, the weekly range from last week is within last month's range, which is within the month's range before. This thing at the moment, it looks like it's just going to flatline and die, doesn't it? You can't trade it. It's just not, you can't do anything with it. It's just not moving enough to do anything with it. Short term, all the yen pairs, if you've got any stop loss based strategies with standard risk reward, no problem. Yeah, the thing's going up and down constantly. So look to sell highs, look at your weekly, your monthly highs and your ADRs, look at your propulsion gaps. Yeah. Yeah, that's it at the minute until it breaks out. So it's just everything is range bound activity on the yen pairs at the moment. So not a lot can do with them really. Aussie New Zealand sideways. Again on this one at the moment, been very, very dull over the last few weeks, last few months really. But as you know, this thing can really kick off when it wants to. So we've got these weekly levels at the moment, which are very, very contracted. We have just broken out to new lows, and I think this is just to do with the market now expecting the Australians to drop interest rates. They haven't really moved it much though. So that CPI figure that we had last week, driving a little bit more bearishness into the Australian dollar. So this actually looks like a really good place to short it right now, doesn't it? Yeah, so we had that big propulsion move there, which broke that weekly low. And then we came down, we hit this, sat around, we broke it, came back up. So it looks to me like basically we're wanting to put a new leg south in. And obviously tomorrow morning is when you're going to find out whether or not that's likely to happen. So if they drop the interest rates tomorrow, you can kiss the Aussie goodbye for a bit. If they decide to give the 4.35, the market will pay attention to the press conference and find out what their forward guidance is. So this is where the market will move tomorrow. So if you get the 4.35 tomorrow, they'll be all ears as to what are your plans. Are you going to drop that down to 4.1? And if so, is it going to be in December? If the answer to that is yes, off we go. Yeah, so if it already drops to 4.1, we'll be off anyway. And then it's a case of what you're going to do in December. Drop it another 0.25%, off we go. Yeah, so it's all looking like everything is starting to roll over on that Aussie. So short plays on everything Australian related short term, probably going to get out of better than everything else. Evil, it's very strange. If I remember correctly, you created a small standalone version EA with only the lazy settings. Yeah, I did, but you can't test anything in it because it is literally just that strategy. The whole point of the Swiss Army Knife EA is to do permutation testing with lots of different exit strategies. So the whole purpose of it is to apply different exit strategies to the strategy to see what is the best way to exit, what's the best way to make money with it. So there's something in there that's wrong. But basically, I've done testing this morning. Quickly before I came on, I tested the Swiss Army Knife EA in its default standard conditions. No problem. It's since I've put the lazy trader settings in there that it's a problem. So I've also tested, this is the fib pullback EA that I've built, which we're going to cover on Thursday. I also did a test with this, and it doesn't give any optimization results. It gives me zeros. Yeah. If I just run it, it works. So there's something to do with the way that these two versions work of the EA, and the only thing that these two have got in common is they both use fib. And I have never, ever built a fib EA in my life. This is the first time I've built anything that uses Fibonacci. And I'm wondering if there's a problem with the MT4 fib in the optimizer. Because I'm using the standard inbuilt MT4 Fibonacci. Yeah. So I'm thinking, I've got two EAs that don't work properly in the optimization system. They work absolutely fine in normal testing, but they don't work in the optimization system. The only thing they've got in common is fib. So maybe there's a bug in MT4's way it calculates fibs, but only in the optimizer, not in the strategy tester in general. Because if I visual test it, it's all absolutely fine. It's doing exactly what it should be doing. So all the results should be fine. It's only the optimization ones that don't seem to work. So I need to spend some time on it basically and figure out why I need to. It's one of those things. You just have to eliminate stuff. I have to run a test and then change something, run it again, change something, run it again, change something. And when I change something and it works, it'll be like, right, that's the thing that broke it. It's a needle in a haystack, unfortunately. So anyway, my week's going to be busy. Once I try to find name corresponding, we have Medieval Saint. Oh, you've got a Medieval Saint with your name. And in England, he's known as Adalbert. That would be Albert, not Adalbert. normally. Albert. I can start calling you Albert then. It's a bit of an old name, but anyway. If the issues are on the optimization side, I'd be rather happy since the single run test turned quite better results. Yeah, the single run test. You can always, when you run a single test in the strategy tester, you can verify it yourself, literally by watching it. So when you run a test, that's on optimization mode. Take that off. So when you run a test, basically in here, if you can run the test and you can visually see it doing what you want it to do, and it does what you want it to do, you know that the result is right. Pretty much. Yeah. So you can see it trading. So I don't know what it's programmed to do at the moment, but it's programmed to get on an RSI, and it's programmed to get me out. And it's programmed to take additional trades. So, you know, if you do this and you measure that and you go, yeah, that's right. Yeah, that's right. That got me out in the right place. And you do this in visual mode. And then if you do this in visual mode and non-visual mode and you get the same result, you know this is right. If you put it in the optimizer and you get a different result out, there's something wrong with the optimizer. Isn't there? And when I run it in visual, it's fine. So if it's one of those EAs that I think, right, well, I'm just going to run normal tests, it's going to take a lot longer to do it. But if that's the case, because there's an issue with it, then that's what I'll do. But I need to verify what the problem is, because it's important to get to the bottom of it. But yeah, it's bizarre. I don't know what it is. Anyway, that's not what today's about. That's for me to sort out, and I will. And if I can't sort it out, I might have to build another EA to test it with. What I want to do is test all the inputs, basically. That's what I've got to do in the Swiss Army knife, but I can't make it go wrong in the Swiss Army knife, the standard version. So it's definitely something to do with those fibs, but I don't know what it is. Anyway, Aussie US. We digressed. So Aussie US, I've still got longs on at the moment. On this one, I've only got 4 positions on it, so it's not deep at the minute. We've got the gap up again today. So we've gapped up, we've broken out of last week's range, basically. So we'll see if we get a continuation on this. I'm looking to get out if we get an ADR hit today on this one. Again, this is just to reduce my exposure on the US for this week. So it'd be nice if we can get an ADR hit on this and come back up and retest this accumulation. But as you can see, the Aussie is likely to go bearish on top of what obviously we've seen on the US dollar. But, you know, if the Aussie goes bearish, basically, and then the US dollar goes bearish, the US dollar is going to go more bearish, which means this is going to go up. So right now, we've kind of kissed this propulsion move, which started this market structure shift to the upside. So there's a good probability of a pullback, obviously, as we know on the US at the minute. But the long term on this, and again, your guess is as good as mine what the long term directional bias is going to be on the US dollar after this week. But interest rates are forecast to come down. If Trump gets in and interest rates come down, they kind of cancel each other out. So it's very difficult to know what to do with the US dollar moving forward. But equally, if it pushes, it will pull. So direction wise, difficult to call. But at the moment, just looking for a pullback on this leg. Yeah, so just looking for that retracement to kick in. I'm not getting greedy with it this week. If it was any other time, I probably would try and get a little bit more out of this, because I think there's a high probability of at least a 38, if not a 50% retracement on it. But not this week. And in fact, this week could be what causes it. Yeah, so, you know, we could easily be back up here tomorrow afternoon, Wednesday morning, couldn't we? So it is what it is at the minute. CAD Swiss. So again, very, very, very sideways, very range bound at the moment. Not a lot you can do with this one apart from play the highs and the lows. Sod's law, when you play the low, that will be the one that breaks. So we'll be looking for a breakdown into this low, which is the low of the intervention. So the yen and the Swiss move together. Obviously, when the yen intervention happened, so did the Swiss. So again, the Swiss franc very, very neutral at the moment, not doing an awful lot. However, that inflation figure should drive a lot more selling in the Swiss franc because they're probably going to reduce their interest rates. So there's a good chance that will move up. That is going to be tagged to the US dollar. So again, almost impossible to predict anything this week. I'm pretty sure this will break out of some range at some point this week, but direction wise, very difficult. So, you've got options to buy the low of last week up, which is also a double monthly. Yeah. So this is last month's low. That is the previous month's low. That is last week's low. Yeah. So we know they're buying this. You can see it very clearly. That's what they're buying at the moment, that level. So if we get back down to there and we get an ADR hit today, you've got an opportunity to go long. However, the election's kicking off. So where it goes, if it's right, brilliant. If it's not, you could get slipped quite a bit when you get stopped out on it if you take a stop. Direction wise moving forward, we can tell you which way it's going. So sideways, so it's just range bound trades off of this. You can see as well, look, these weekly ranges. So that's the last monthly range there. Inside of that, we've got a weekly there, we've got a weekly there. The contraction on this was quite severe and it's broken out to the downside. So it does look like market structure wants to go short on this. Yeah. If the US dollar does sell off, this could come out very, very fast. So yeah, I mean, it looks to me like it wants to try and roll over. As you can see, we got kind of a descending wedge going on, which is a bearish breakout pattern. So it looks good for shorts, but right now it's just kind of flip-flopping around. So not a lot you can really say or do with that. Euro, Lagarde basically has come out very happy with the way everything's going. So at the moment, the euro, we've had quite a lot of sell-off on the euro. It's pulled back over the last couple of weeks very, very nicely. So we're forming a nice little range here. Long term on the euro, the interest rates are pretty much where they want them. 3.4 is pretty good. Our inflation target is hit. I suspect we'll get one more out of them this year. So ever so slightly bearish, but everything is ever so slightly bearish at the moment, isn't it? Apart from the Australian dollar. So it's who's going to be more bearish than the other. Euro at the moment, I think you can trade in either direction. It's probably going to get pushed around a lot by the other currencies as the other currencies get news. Lagarde has been spot on with inflation estimates, interest rate targets, the way they've delivered interest rates to control inflation. They've just got it totally right. So hence, obviously, the euro, everybody's kind of been able to know where it's going, and it's been very easy to trade in any direction. And I don't think that's going to change. So euro, I would be happy getting in anywhere on this. Longs, shorts, ADR hits to the upside, reversals at resistance. Just, yeah, either way, just no setups on it at the moment. So hourly, you had one last week. One didn't quite, but you had one there, which, again, not quite. It's very difficult. It's not really moved far enough because it's been very orderly in its movement. So, but it's very high at the moment, so be looking for a pullback into this area. I suspect, but it might just be flagging for a break up to come and test the previous month's high or any one of these levels, basically. So shorts, I would say, and then obviously scaling if it continues to rally. But obviously trading this with the Australian dollar this week, that could go anywhere. So if they do drop the rates on the Australian dollar this week, that's going to be flying this week. Yeah, so be aware of that. Euro CAD, beautiful resistance bounce last week up here, triple high basically, and we're back there again. So again, good looking short opportunity on this one. US dollar Swiss has just hit ADR. Okay, US dollar dropping, or is that Swiss franc rallying? Swiss franc's rallying. So we've got a strong move on the Swiss franc at the moment. Typical, my Swiss yen will be going the wrong way. Um, yeah, Euro CAD, obviously we're up at that high now. So this is a very nice resistance area we've got on this. Very, very strong push, and we got kind of a 38 retracement bounce off of it straight up into there again. Canadian dollar's obviously going to move with the US. So this is a pretty good short area. The trouble is that is really your only upside resistance that we might find limit orders at going back for quite a way, as you can see. So where we are at the moment with this is kind of in a big 4-month range at the highs. If it breaks out of this, it's very difficult to know where it's going to go. So it's one of those trades which is a little bit risky as a position trader, because the only upside resistance you've got really is coming up somewhere around here. We are at this level they have continuously sold at, and we are batting up against it a couple of times. So if it breaks through this, that would be a good looking short at 150 ADR, because it's very extended. It's probably going to want to pull back on that. However, it could just go from here and then come back down and retest these lows again. So it's totally range bound. Always sell at the range highs. Simple, isn't it? You had a 4-hour RSI extension entry on this one here last week, which you would have had somewhere in the region of 50 pips out of, about 3/4 of an ADR. Wasn't an hourly, it was a 4-hourly only. And there's a reversal alert, look, that went in there on the hourly time frame. There's your retest, although that was news. But yeah, nice looking short opportunity there, but wait for some price action to confirm it. So drop down, wait for a reversal at that high from Friday. If it happens, good looking short. If it doesn't happen, you're looking 150 ADR is next resistance. Euro Swiss reversal, that's just gone in. We've got a Swiss franc move on the go at the moment. Euro Swiss, one of the lowest ADR pairs out there, 40 ADR. It doesn't move very much at all. The euro and the Swiss move together a lot of the time, unless it's a safe haven run or there's some manipulation going on the Swiss franc. So very hard to trade this one, a little bit like the euro pound. It's hard to get a signal on, as you can see on the hourly chart here. You had one there. I'm talking about 80 extensions, 80-20 extensions. You had one there, but that was that weird end of move on the intervention. So yeah, it's just very hard to get into at the minute, Euro Swiss. It's just not moving very far or very fast. So 4-hour RSI 10, you've had some decent entries. That's the end of the intervention move. So it's kind of from here. You had a pullback to there. You had a long there. You had a short there. That's about it. So no signals on it for the last sort of 4-6 weeks, really, because it's just stuck sideways. But nice rejection going on at the monthly high. Yeah, so that is last month's high rejection. We've got another one coming up at 225 ADR. So be targeting sort of these lows if you're short on it. Reverse alert went in on that on Friday. And obviously it's gapped up a little bit, but market structure looks nice and short. We've got a little gap fill from the news on Friday there, which I suspect it will come and fill, which is going to hit ADR. So that's probably where you get a little bit of a support bounce from. Euro pound, again, ADR on this 46. It has come to life a little bit since the pound budget last week. So ADR is starting to increase on it. Whether or not that pound is going to continue to drop, we'll have a look in a minute because we go through the pound pairs. But pound recovered very nicely after the budget last week. So I suspect, again, it's the market not really wanting to do too much with anything until we've got that news out the way of what's going on in the elections. Yeah. So we've got a nice high coming up. So if we push up into above ADR levels this week, we're going to hit that level, but we're going to hit it probably with the election or one of the interest rates. So this week, Bailey's going to be dropping our interest rates on Thursday, 4.75. So the pound, when we get that drop, which is probably already factored in, will sit around and wait and decide what it's going to do when it knows what the statement is and whether Bailey's planning to do more interest rate drops in December. So this week, we could have a very, very weak pound. So the budget obviously has weakened the pound. It has pulled back last week, but potentially we should be seeing more weakness coming in the pound now. We are starting to gradually drop those interest rates, which is good. However, we are very, 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 very slow in the rate that we're dropping. So we dropped from the 5.25 to 5 in August. We didn't change them last month. We are changing them this month. December, I suspect we will probably freeze. But we've now got a new budget. We've now got new borrowing. It's in the Bank of England's interest, really, to keep this stable, not to drop it. So that could also act as a bullish stance on the pound. So very, very hard to sort of predict the pound movement at the moment. My stance on it is kind of slightly bearish neutral. And with euro pound, obviously, euro is fairly neutral as well. So for me, really any direction on this is good to get into. However, from a swap perspective, I want to be short in it because it costs too much money to long it. It's one of those very, very expensive pairs to trade. Euro New Zealand, it's very difficult to call this at all. Not going anywhere, is it? Market's kind of gone into this contraction phase, isn't it? But yeah, much more interested in shorts than longs at the moment on this one, just because it's extended to the upside, but it's kind of already played out. So I'm not taking any new trades this week. You had a short opportunity on it just about last week, which you'd be out of already. So you'd have had the reversal in there. And you'd be out of that with, mind you, that's a gap. So be out of that with about an ADR to the downside. So nice, easy, quick ADR exit on that. But at the moment, just kind of flip-flopping around. Euro US dollar, got longs on at the moment still. This is in profit for me at the minute. I'm just trying to hold it today because I want to see if they continue this gap fill. So like I said, today with the US dollar, we've got a lovely gap down on the US. So everything's obviously gapped up against it. I'm holding this because I want to see if we can get a break above last week's high. If we get a break above last week's high on the Euro US dollar, one of the main currency swap pairs that obviously the market monitors with the US, they will see that as a sign of weakness in the US, and we may well get a nice rally started. So at the minute, it's not getting anywhere, as you can see. So since London's opened, we haven't gone anywhere. We're flat. Yeah, lots of wicks, lots of movement, no direction. So that gap basically is either going to get filled or it's not. So we'll wait and see. I've got the feeling, looking at this price action so far today, that we might just sit around, unfortunately, but we'll wait and see. So I've got an exit on that. But yeah, long based off of the correction up into here. That was my original play. I've reduced target, obviously, to try and get out of it a little bit quicker because of the elections this week. Franco, I voted Friday. There were big lines, were there? Right, okay. Keeping my cash dry till after the election, yeah. There's no problem with trading, obviously, during the election. It's one of the best times to trade because of the volatility, yeah? I mean, we need money to make money. We need volatility, rather, to make money. This is a massively volatile week. For not even if there was no elections this week, we've got 3 interest rate changes this week. Yeah, it's a massive week for news, as well as obviously with Trump. So any type of stop loss based strategy, brilliant. Just hold your winners. Yeah, if you get into something, and this is the thing you've got to focus on, if you get into something and it starts to work out, add to it and hold it. Don't get out at 2R. Yeah, you've got the potential for 10R this week, and it will just happen. There'll be a massive move. Look at the budget for the pound. We're coming on to the pound pairs now. You know, that's the budget. And then that is the continuation, which is where I got out of my shorts on the pound odd. that's the sort of move that will start. When you see that, you can pretty much be sure that it is going to continue in that direction, because the market's just waiting for some confirmation to start a big move. And this week is all about, if you're going to get into anything, use risk management. Yeah, have a this isn't working as I thought it was, get out. But for targets, go for the runners. Yeah. Some of the biggest trades that people have in banks and institutions are just because the momentum takes the trade. It's not because they've got the entry right. It's not because they've planned the risk reward or anything stupid like that. They don't use that type of trading strategy. They get in and they get the runners, and it's the runners that make you the money. Yeah, if you get in on the S&P at exactly the right spot in a pullback, and it's the last pullback this year, you're done. Yeah, but you never know, do you? This is the thing. And it's about holding. And this is where everybody struggles, which is why I did a whole session on it in the member streams on targeting back here somewhere, wherever it was. It was the indicators, wasn't it? Target and level indicators. Yeah. That's the most important for me session out of all of those, the ones that we did on indicators, because that's where you make your money. Yeah, everybody focused on trying to get into the market at the right point. That's the complete opposite of what everybody should be doing. You can flip a coin and get into the market. Where's it going? Why did it bounce there? It's obvious. If you know this, because you have this drawn on your chart, you know where to exit. I exited the trade here because we're approaching the bounce point. Yeah. That entry was wrong. That entry was wrong. That entry was wrong. My exit, spot on. Because you focus on where the market's going and you take what the market gives you. You don't try and get, my average is there, I need a 3R out of it. If the 3R is down here, you ain't going to hit it. Get out where the market's going. That's what you can do this week. If you get in on a US dollar trade and it starts to go your way by 1 ADR, don't get out because it's hit ADR. It's highly probable it's going to do 5 ADR. Or if it doesn't do it today, it will do it by the end of the week. So it's about holding them and looking for where the market's likely to go. Markets source liquidity at bounce points. That's what the market does. Yeah, there's limit orders at this level because everybody that was short here got it wrong. They flipped long because they're always in the market. If they're long, they will have more longs to place at that level. That's why the bounce points work, isn't it? So this week, when you're taking any trades on anything to do with the US dollar or any currency really this week, because there's so many interest rate numbers coming out, focus on where it's going. If you can get in and you happen to get it right, it's a 50-50 chance you're going to get the direction right. That's it, isn't it? If you get the direction right, hold it, because this is the week that you're going to make the money. Pound odd coming down. I'm out of that at the moment. There's nothing to trade on at the moment. It's sitting around in the middle of nowhere. So nothing particularly exciting. Pound, as I say, interest rates are coming down, but so are the Australians. Potentially, we're not having it this week. Maybe we will. I don't know. But yeah, I mean, this budget, obviously, it's very clear what the market thought of it. We had a lovely recovery. But, you know, the recovery is just normal market structure. So as you can see this morning, the price action so far this morning is gap fill and go. So looks bearish to me at the moment, the pound. There's no reason why I don't think it will continue to be bearish based on what this budget is. This budget is incredibly expensive for the UK. We've got to find the money from somewhere. It's all coming out of taxation, and that is going to stifle growth. Stifled growth is going to make the pound weaker. Yeah, businesses are going to start going bust because they can't afford to employ people now. Yeah, unemployment rate is going to go up because businesses aren't able to employ people because the cost of national insurance contributions for businesses is getting high. Any businesses that are struggling at the moment, likely to tip them over. Yeah, it's not going to be good. It's going to be hard, but it's going to be probably bearish for the pound moving forward. So I'd be much more interested in shorts than longs on everything pound at the moment. Even more so now than normal. So ADR hits the upside, double tops at monthly and weekly levels. Any RSI extensions to the upside, much more interested than shorts. But obviously, don't forget there's always two currencies in play. So if you've got a currency that is weaker than the pound, obviously the pound can still go up. To get to these levels, it's still got to have something weaker, hasn't it, to be able to get there. So pound Swiss, very, very sideways as well. But obviously, nice Swiss franc move going at the moment. So potentially looking for retest of last month's low initially, then previous, but continuation shorts on this one. Again, the Swiss franc and the yen, very, very neutral at the moment. So obviously if the pound's going to be weak, this is more likely to drop faster than it is to pop. So I'd be much more interested in shorts on it. Pound New Zealand, same sort of thing. Yeah, beautiful spot at the moment for a pullback. There's your propulsion gap, which is holding at the moment. So we're looking for shorts down into this area here. Again, you know, we covered this in the member streams, why I have this indicator on my chart. It should be very obvious why I have this indicator on my chart. Yeah, this is where the limit orders triggered. The limit orders triggered again. They got overrun, so they flipped long, and now they are long. Yeah, so if you are short on this, get out there because they're long. It's very simple. Market only moves from support and resistance zones. Yeah, they sold it hard there. Again, just happened to coincide with the budget, obviously. But for those 2 hours there, again, tweezer tops. Again, we covered in price action. We did an entire session on reading price action, which is in there as well. Somewhere. One of those. It's all in there. But yeah. Same stuff over and over and over and over again. So yeah, pound New Zealand, much more interested in shorts. New Zealand is dropping its interest rates. So we are getting into the cycle where we've got a bear against a bear here. But the New Zealand interest rates, I think, are going to have to come down pretty fast. They're still massively high. And look at the speed of inflation drop at the moment. It's ridiculous. This is coming down far too quick. Yeah, they need to pull the parachute on this, which means that's got to come down fast. Otherwise, they're going to hit the floor hard. That's going to hurt. So the New Zealanders, I think, have got to drop their interest rates very quick, which obviously would give that a bullish stance. But we need to know what Bailey's doing this week. So again, very difficult to forecast. Franco, I get criticised in groups for my low, small risk trades, but I'm criticised by people trading demos. Yeah. Thinking of becoming unsociable. That's the best thing to do. The best thing to do is to leave all the groups, Franco. Honestly, leave all the groups because everybody else knows better than you. And that won't change. Even if you become uber famous, everybody will disagree with you. Yeah, it doesn't matter. Everybody disagrees with everybody nowadays. So if you just ignore everybody else and do your own thing. Yeah. Like I keep saying, every day I come in here and I say, it's either going up there or it's going down there. I have no idea where it's going. Everybody will tell me where it's going and everybody will post charts going, hey, look at this symmetrical triangle. They still don't know where it's going. Nobody knows where anything's going. If you listen to them, you will just get a completely different version of what you think, and that will send you into paralysis analysis. Look at the chart, make your mind up. You know as much about this movement as I do. It's going up, it's going down. So being unsociable in trading is the best thing you can do, because you just end up getting into arguments. I've never had arguments with people all my life. Never argue with people. When I started trading, everybody wants to argue because everybody's right. And this is the trouble with something that is binary. There is only one thing that can happen to this today. It will either be a bull day or a bear day. One of the two people arguing is going to be right. It's like a boxing match. Yeah, you punch, I punch, you punch, I punch, bull candle, bear candle, bull candle, bear candle. It will end up bullish or bearish, which means one of you is on the floor. Argue all day about it if you like, but that's not what makes you money. It's just one of those things. Yeah, can't win. You can't win. If you're right, you can't win. If you're wrong, you can't win. You can win by ignoring everybody and just doing your own thing. Pound US dollar, we've got a gap up in play. Obviously, this US dollar today is either going to continue or it's not in this drop. So good looking. And in fact, US dollar Swiss is probably our best gauge at the moment because the Swiss franc is rallying. It's coming down quite hard. Canadian is holding up at the moment. Yeah, so this US at the moment, not really moving, is it? Because we've got some are bull, some are bear. So the US is being pushed around by the other currencies at the minute. So yeah, US dollar, pound US dollar again this week. Your guess is as good as mine. Long term at the moment, I'd be much more interested in doing that. I think the US dollar interest rates right now are going to come down fairly orderly. Obviously, we got 4.75. They've got to get their interest rates down quick as well because they are approaching that 2% target. Although I think it's going to bounce. So I think what we've got to do is really look at the US as at the moment. It's kind of neutral. We'll find out whoever gets in this week what they decide to do with the economy because that's going to drive interest rates. The Fed will adjust their stance based on what the new leader comes in and says they want to do with the economy. Yeah, if Trump comes in, immediately he's going to stick tariffs on all Chinese stuff, which makes everything more expensive. But it will grow the US economy. Therefore, it's bullish. So it's an absolute critical time this week for directional bias. It will. I think the US dollar this week will decide on a direction, and it will probably continue to go in that direction for the foreseeable, unless something obviously changes. But you can't really decide either way on this at the moment. Bearish certainly on that one. If Trump gets in, I think probably it's going to be like that. But we will see. New Zealand dollar at the minute, not really gone far for the last 3 weeks or so. Swiss franc obviously is a little bit stronger at the moment, but you can see by all the US New Zealand pairs, it's pretty neutral at the moment, as was the Australian dollar. So the commodity pairs basically very, very sideways. Not really anything you can do with this. There's been no signals on this thing since back here. For me anyway. Hourly, you've probably had a few opportunities. No, there's nothing extended on the 80-20 on the hourly. If you've taken the 70-30 extensions, which are a little bit more aggressive, you've had loads of opportunities for trades, but it's not really going anywhere at the moment. The difficulty with the New Zealand dollar CAD is they're both commodity pairs, both obviously oil with the Canadian dollar and New Zealand dollar sheep and everything else. But yeah, they're commodity related pairs, so they tend to move with the commodities, which at the moment are pretty stable. So that is. So yeah, nothing really to report on that. New Zealand dollar Swiss at the moment coming down. Swiss franc and the yen, no idea. So Jordan has come out and said basically they will manipulate the Swiss franc as required, meaning that they will just move it and manipulate it whenever they fancy. So there's no normal flow going through the Swiss franc at the moment. It's just whatever Jordan wants to do with it. So right now, it's probably going to do the same thing, the Swiss franc, as the yen, and the New Zealand dollar is neutral. So you can kind of trade this, I think, in any direction at the moment, the New Zealand. But obviously with the US dollar, yeah. That's a good example of aggressive drawdown control, this New Zealand US look. So that was the first entry there, second entry, third entry same day, fourth entry there. That was an aggressive, that was an aggressive. Yeah, so the aggressive drawdown control positions got me out of that very nicely. The only reason I got aggressive on that there is just because of the elections. Otherwise, no, I don't get aggressive after 4 trades. But good opportunity for exit at, again, support resistance. Yeah, so this is an area we flipped long. We came back to here and we stalled out. So looks to me like the turning point. However, obviously today, this week, it's whatever it's going to be, isn't it? But we will see. And the US pairs, obviously, we know about US dollar CAD. So we've had a rally to start off with. So the question really today on this one is, are we going to gap fill or are we going to gap and go? If we're going to gap and go, we need to do it today in the US session. We need a confirmation that we're going. And if we're down here, I'll be taking some of this off in profit. In fact, I might even take it all off in profit. I think this time 10, 6, so 1, 2, 3, 4. So that for me, I think was about 7%. That is going to be about 10, maybe. So if we can get an ADR out of this today, I will get out probably. However, there's this nagging thing that says that is all of last month's loss back, but that is chasing losses and that tends to be fatal. So I will probably just get out there, which will give us a nice month. Will give me a nice month this month. But US dollar Swiss is already going down. All these US pairs, there's nothing I can say about them really, because I have no idea where this is going this week. It's going wherever the market wants to go, and that is going to be driven by whoever gets into the election. So we'll wait and see. Same with gold. If you're trading gold, if you do trade gold this week, it's going to be mental. It's going to go somewhere crazy. So yeah, be aware. Obviously, it's just a US dollar cross. Yeah, so if you're trading gold, you are trading the US dollar, and that is going to be crazy. I get a lot of could have, should have, if only. Hindsight trading, yeah, I love it. It's really good. It's really easy, hindsight trading. I think that mindset is harmful. Harmful to your confidence and trading in general, yeah. One of the things that is really difficult and took me ages to master is forgetting the trade that you've closed. Yeah. So one of the reasons I moved into position trading was because I'm not very good at handling constant loss. I think it's constant rejection. It's my female side coming out. It's not my female side. That's the wrong thing to say. My feminine side, no. Constant rejection upsets me, as it does with most people. People don't like being rejected. People don't like getting things wrong. When you use a stop loss in your trading, you get it wrong all the time. More than half the time, you'll be getting it wrong. And then when you get it right a couple of times, you'll get it wrong many more times. And that's basically the way it kind of goes. You can easily overcome it by removing the last trade from your chart and forgetting about it, and then just going, right, this is a new trade, new opportunity. But there's only so many times you can get a new opportunity before your mind goes, but you remember the last 10 opportunities didn't work, and you give up. And this is why you system hop. And it's basically because every time you look at a chart, all we can see is the history of our trades and our price action. And it's very easy to spot something in hindsight and go, well, if only I had, I should have. And it's obvious, isn't it? Yeah, those are the things that go through your brain. Unfortunately, you can't eliminate those because unless you zoom in like this, you're always going to see what has happened in the past. And no matter how many times you see something happen and it's obvious, it's only obvious because it's happened. And it's a very hard thing to get over. And the only way you can really get over it is by just ignoring the last number of trades and just ignore what's happened in the past and look at every single trade as a new opportunity. We've got 2-day low and yesterday's low at this point here where it's bouncing. Yeah, looking at this right now, this is a lovely long. We've had a reverse alert, and this is a retest of a reverse alert at a double daily support. If we look at this chart tomorrow, I should have taken that. Take it. It's a new trade. The odds are the same. It's 50-50. This is either going to right now do that and come and test that high, or it's not. and it's going to come back down and break this low. One of those two things is going to happen. There's no point in going, I could have done that, I should have done that. The thing that changes your mindset to this is understanding how the market moves and understanding that it doesn't matter that that low there and that low there exist. It doesn't matter that you can see it bouncing from that level. What matters is when you press that button, it will go up or down. And that's the important thing that you need to understand. There's a 50-50 chance when you press the button. The thing that makes you money is controlling the risk and knowing where the price is going. If that is a 2-to-1, great. If it's a 1-to-1, great. If it's a 0.5-to-1, great. Because risk reward does not make you more profitable. Risk reward has no impact on your profitability as a trader whatsoever. Getting out with a profit makes you profitable. If you can do that more than you don't, you will make money in trading. Yeah, but understanding that helps you to stop looking at the wish I should have done this, I could have done that, if only I'd have known that. Oh, it's obvious, isn't it? Those are the things that go through your brain, and they just put in your head, they just put confusion. They cause confusion. They cause you to sort of not misjudge yourself, but they cause you to overanalyze what you're doing. Yeah, 50-50 every time. When I press that button now, buy, there's a 50-50 chance that will go up or down, right? So what I do is I go, I'm going to buy it. It's either going to get to that high or it's not. Yeah, I don't care what the monetary value is. I don't care what the monetary value is there. If I'm using a percentage risk on my account, I'm either right or wrong because it's a binary choice. Yeah, the odds of it going up are 50-50. The odds of it getting to target are a different odd. The odds of it getting to stop are a different odd. But that doesn't make me profitable. By saying that is a bigger TP than that stop loss is irrelevant. If I set my entry there and my TP there and my stop loss there and give myself a 1-to-1 risk reward ratio, after 10 years of trading, I will come out with a net zero return on my account. That's what will happen. If I set myself with a 2-to-1 risk reward ratio on every single one of my trades, I will come out with a net zero on my account. But I will come out with a strike rate of around about 33% instead of 50%. Same result. It's just that I won't make as many trades because I've got to make price move twice as far to get to my target. Yeah, being right, it moves up and I take the money. Brilliant. If you can do that more than 50% of the time, you've got an edge. But we are so hung up on what's happened and like, oh, I wish I'd have done that. I've just pressed that button at random. I'm going long on gold. I don't trade gold. I don't know if the trade's going to work, but if it does work, it's going to go up and test that high. If it doesn't work, it's going to stop me out. I haven't got a clue. Neither have you, because I'm not in control of the price. Neither are you. The banks are. And if the banks want to go long on this today, it means the US dollar is going to drop. Is it? I don't know. It's a 50-50 chance, isn't there? That's it. It's 50-50. Always 50-50. If the US dollar is going to gap and go today, this trade is profitable. If the US dollar is going to gap fill today, this trade is a loss. I can walk away now and come back, and one of those two outcomes will have happened. There's no point in looking at, what I should have done is press the buy button there. Press the buy button. Take the trade. It will work or it won't. Simple as that. Self-whipping is not a good strategy. Nope. Yeah. Self-whipping. I was trying to think of a witty comeback then, but I couldn't. Be thankful for all the wins, big and small. Yeah, you know, and this is the thing. If this gets up to here, I can basically then go, I'll tell you what, I'm going to move that up to there, and I'm going to move that up to there, and I'm going to hope that the US dollar collapses on the election. There's a 50-50 chance. So every time I adjust my position, there's still a 50-50 chance it's going to go that way or that way. I don't have a clue should be a thumbnail, yeah. But it's the truth. It's the absolute truth, isn't it? I don't have a clue. And none of the people out there you see on YouTube or any of the courses you buy or anybody in a central bank right now has a clue either. They don't have a clue. They can't make the price go in a direction. They can trade it, but they can't control it. Central banks, not central banks, but big banks can control price, direction, and movement with the market maker desks. But the traders within the banks don't know what the weight of orders from the other banks are. So they can try and control it, but at the end of the day, they still haven't got 100% control either. So all you can do is enter a trade which has got a 50-50 probability of going in the direction that you want it to go in, and then you will take your profit or your loss at a point. That is where the money is made. Exiting the trade. Nothing to do with anything else, is it? If everything is 50-50, then how do you find an edge in the market? So, well, it's not an if, is it? Can you show me another way this can go? Is there a third option? It's either going up or down. Yeah, it's not an if everything is 50-50. Everything is 50-50. This can only go up and it can only go down and move through time. There's three constants in the market: time and price. Price has got 2, time has 1. Yeah, nothing else can happen. There's a members video on the 3 outcomes of a candlestick. It's bullish, it's bearish, or it's indecision. There is nothing else. Yeah. So when you press the button, the banks will move the market either in your direction or against your direction. What you do after that is your edge. Yeah. So if you are an amazing trader and you can get 60% of your entries right, that's your edge. So if you target a 1-to-1 risk reward ratio with every single one of your trades and you can get your strike rate above 50%, there's your edge. Yeah. If you target 3-to-1 risk reward ratio and you can get your strike rate above 33%, there's your edge. Yeah. You will never find a system or a strategy that can tell you what that will be, because it's random. The market moves at random. So if you develop a strategy based on historical price movement and you find something that happens 60% of the time in the past, that has nothing to do with what the strike rate will be from today onwards. You can do a back test over 10 years if you want to and find something that has happened 60% of the time. Go and do that same test over another 10 years of period. If it's 60% again, you got something there. Now go and do that test over another 10-year period, and if it comes out as 60% again, you can be pretty confident it's going to be 60% in the future. You've got an edge. But that's not what people do. What people do is they stick an indicator on a chart, and they go and test it for 2 months and go, this thing's brilliant. 75% of the time it was right. And they wonder why they get 10 losing trades in a row. It's not a long enough test period to give you any kind of edge in the market, is it? But edge is about getting the strike rate above the risk reward ratio if you're going to use that type of trading. If you're using a stop loss based strategy and you use a 1-to-1 risk reward ratio, you need a 50% strike rate. You're going to get that by default because it can only go up and down, and it will either go up to that or it will go down to that. Those are the only things that can happen. If you reduce that down, that will get hit more times than that will, which reduces your strike rate. As your strike rate goes down, yes, you make more money on those trades, but your strike rate reduces. Again, I did a session on this last week. This is the bit that people don't get. So you have to increase your strike rate, or do what I do. Let the market move and get out when you've got a profit. Yeah, I can give a monkey's what strike rate I've got. Doesn't make any difference to me. My strike rate can be 10%, it can be 100%. Doesn't make any difference. What matters to me is I've got a profit. And if I get it wrong, I will move my price to a level that is better for me, and then I'll try and get out again. It's a different way of looking at it. And this is what the markets do. This is what the hedge funds do. This is what the pension funds do. This is what the speculative traders in banks and institutions do. Yeah, they don't get in with a stop loss because there is no edge there. There's a zero sum. This is a zero sum game. A 50-50 probability is a zero sum game. The outcome is 50% of the time one, 50% of the time the other. That can't work. Everybody on the planet that sells you a course or a video or a guru that's got an affiliate for something or is doing this, that, or the other, whatever it is, they're trying to show you a way to get into the market with a higher risk reward ratio that generates alpha. But they don't understand, do they? That there's a zero sum game. It's a 50-50. You can't do that. It doesn't work. And people do this for the rest of their entire lives, looking for it. It's called the Holy Grail, isn't it? How do you create an edge? The only way you can create an edge is by moving the price. Because price is a constant. It goes up and it goes down through time. If this goes down, I can either give the market my money or I can change the price to a more preferable level and wait for it to go up again and then get out. I've removed that. That is never changing. That's a constant. That's a constant. But that is also a variable because I can change this. This line can be changed. Anyway, we can argue again. I'm not going to argue about it because I won't win. Because there's people out there that are going to continuously hunt for the Holy Grail and they're never going to find it because it's just not the way it works. Really, it's black, red, and zero roulette odds. Yeah, this is the house edge, isn't it? Yeah, the house has got an edge. Think about it. If roulette didn't have the double zero, the house wouldn't have an edge. What would happen is they would come out at zero. So would we. So by introducing a double zero on a roulette wheel, the house have now got a 49 to 51 edge. They've changed the 50-50 zero-sum game into a positive. We can't do that. We don't have any way of changing the edge. If every time you press the button 50-50, how do certain traders achieve 80% win ratios? By using negative risk reward. Yeah, I can, right, I'm going to close this out now. 100% strike rate. Right, I've got a system on gold, okay? It's got 100% strike rate. Yeah. So what you do is you wait for price to react at yesterday's low and the previous day's low. But the previous day's low and yesterday's low have to be within 10 pips of each other. And you have to have a bull candle, which is twice the size of the previous one. So it's a bullish engulfing, twice the size of the previous candle at yesterday's low and the previous day's low. 100% strike rate, Ryan. Go and back test it. That's how they do it. Very easy, isn't it? I've made nothing. I've made a tiny, tiny, tiny little profit on it. It's 100% strike rate. All that you do, test this with an EA, right? Go and find any EA out there that uses a stop loss based strategy, right? Put a 1-to-1 risk reward ratio on it and let it trade. Run it over 5 years. It will come out with a 50% strike rate or a 51% strike rate or a 49% strike rate. One of those three strike rates. That's what you'll get. Okay, with a 1-to-1 risk reward ratio, you will return one of those three. Yeah, because the laws of probability mean that it will be right half the time. Because when you press the buy button, if you are looking for an equal distance up and down, there will be an equal distance up and down 50% of the time because the market only does that. That's all it does. If you increase the size of the TP, what will happen is you will hit the lower one more often, around about 66% of the time, which means you will hit your TP 33% of the time. So you now have a 33% strike rate. Your zero return will still be the same. However, if you reduce your reward to here and leave your risk where it is, your strike rate will increase to something like 65 to 70%. So I have got a 70% strike rate, but I'm not going to be able to target as much. That's how you adjust risk reward and how you adjust your strike rate. I can come up with a strike rate. I've got a strike rate at the moment on the strategy that we're looking at the moment has got 79% strike rate. The one that we're covering on Tuesday, tomorrow, it's got 70 something percent strike rate, 79% strike rate. Do you know why? Because it gets out at a 38 retracement on Fibonacci. 38. It's got 79% strike rate. It's brilliant. It's lovely, good, lovely strategy. But it's because it's targeting a small amount of money. It's easy to achieve it, isn't it? I just made a lovely trade there. Now, if I'd have waited another candle and it's down there, and then it goes down to there, I lost. But I didn't lose because I just got out there, because I increased my strike rate. If you get into a trade and it moves 1 pip in your direction, you can be right 99% of the time. When you're wrong, though, it will wipe out 99% of the profit because it's a zero-sum game. Everything is 100. Every time you press the button, over to that one. Best edge would be to buy when big banks buy. I know, funny, isn't it? How could we possibly find out when the big banks are buying? There's a video out there about there's a guy I found. I can't remember what he calls himself. It's something to do with the, I don't know. I can't remember. He's the FBG guy, or I don't know what his name is. But his video basically just shows you perfect examples of propulsion gap fills. But it never shows you any examples of that. Yeah. That's by no means perfect, is it? We missed that, missed that, missed that, missed that, missed that, missed that, missed that. Missed all that. Won't show you that. It's not Nick Sean now. Nick Sean's turned into a terrorist, isn't he? He's now running around with AK-47s. Anyway. But yeah, I can't remember what my point was. But big banks buying. But this is the bit that this guy doesn't understand. Yeah. So you basically sell there because this is where the big banks, and I totally agree, that's a good point to sell at. But what he doesn't explain is how you make money selling there. How do you make money selling there? Yeah. He can't explain that bit. So he shows you what to do in hindsight. Probably Aussie New Zealand is probably a good thing to do this on at the moment. Yeah. Yeah, so the big bank's ordered there, so you buy it there. Correct. How do you make money out of that? You can't put a stop loss under there and a T. Where'd you put your TP? Where'd you put your TP? There? That'd be good, wouldn't it? There's a good way to make money on that one instance. So the next time it happens, we buy it here and we put our stop loss here. And I put our TP. It doesn't matter where I put my TP, whether I put it there, 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 or there. I lost that much money. Because it will 50% of the time, you'll get it right. 50% of the time, you'll get it wrong. Because getting in there has nothing to do with making money. Where you exit has to do with making money. Nothing to do with the entry. Everybody's focusing on the entry. It's nothing to do with it. If you go and look at anybody that's done YouTube videos on science to do with trading, so probabilities, mathematics, the scientific approach to trading, which is basically all I do. Mathematics. That's it. Probabilities. If you look at people that do that sort of thing, they will never focus on how to get into a trade. They are focusing wholly on when you are in a trade like this, which is the best way to exit it. Because the entry is a 50-50. The exit has a million variables, doesn't it? It's all about the exit. Lose small, win big. Yeah. But again, if you do find strategies with an edge over a long period of time, there's nothing wrong with it. I've got plenty of strategies with a long-term edge, but they all work on a daily time frame. But the edge is no more than 5 or 10%. So basically, it's a 1-to-1 risk-reward ratio with something like a 55 to 60% strike rate. You'll never get any much bigger than that. Somebody's got an 80% strike rate. They haven't got an 80% strike rate with a 1-to-1 risk-reward ratio. If they do, they are an incredibly profitable trader, and they'll be working in a central bank on probably 7 figures. There's not many of them around. I'm recently going through Robin's Cup winners interviews. A lot of them discuss about volume and market profiles to have an edge. Yeah. But the edge is not the volume profile or the market profile or volume. The edge is them. They are the edge. And they will do the same thing. I've been through this before. There's a volume profile. If I was to draw a volume profile on this chart now, yeah, it would look something like this. Yeah. Because there's a lot of price action there, and there's a lot of price action there. What is on the chart here? You don't need volume profile and volume to be able to tell where the banks and institutions have moved the market from. You need to see where they've moved the market from and understand that that is where they will probably move the market from again. But it's because of this. It's because of the flip. That's why that happens, because everybody long here flipped short. When they get to this area again, they add more size. These are great, but they don't help you make profit. They tell you where the market is likely to change the 50-50 direction. But when you get out is why you make money. If you get the entry right, I can get the entry right 70% of the time. I can probably get the entry right more than 70% of the time. I just got the entry right on gold by guessing. Right? But the reason I made a profit was because I exited. Not because I got the entry right, I exited the trade. That's why I made money. It's the most impossible thing to do because it's discretion. It's all discretion. But the Robin's Cup winners, you know, they are trading futures, and futures is about volume profile. It's about order flow, and this is as close as you'll get to order flow. Yeah, I can see order flow on the chart here. Yeah, and all order flow is direction of price caused by orders. So again, we covered all this in the member streams, but the market moves because of order flow. Yeah, banks and institutions place orders into the market every day. If the volume of orders here is 100 million and the volume of orders here is 700 million, the market will go up. The flow of orders here is higher than this. Think about it like water, if you like. If you want to call it order flow, water flow, same thing. If there's more volume going that way, the market will move that way. You can see volume because when large volume comes into the market, price moves quickly, which shows you where the volume is. And you will always find it's in some kind of propulsion. They add into propulsion. Yeah, that's what they do. If when you get to that propulsion or order flow or market profile, whichever way you want to look at it, when they get back to that area, one of two things will happen there. There will either be a similar amount of order flow driving price in that direction, or the order flow will be complete in that direction and it will fail and drive straight through it. But what is this? 50-50 probability of price moving in your direction or not. It has nothing to do with making money. Yeah, I can get it right. When price gets back here, I can buy it. How do I make money? Exiting. If I buy it here and I get all the way up to here and I don't take profit and it moves down to here and hits my stop loss, I got it right, but I didn't make money. The entry hasn't got anything to do with you getting it right, getting the money out of the market. It's got to do with you being right for a period of time. Remember the constants. Price, up, down, time, constant. Yeah, I can get into a trade here, go long and hold it for 6 years and have a stop loss here that gets hit on year 7. I got it right for 6 years, but I didn't make money. Nothing to do with my entry, all to do with my exit. Yeah, the Robin's Cup winners. And this is the thing with trading competitions. Yeah, some people have made careers out of trading competitions. Yeah, they do well in a competition. Now all of a sudden they're working the circuit doing talks. Yeah, they won a competition. I won the postcode lottery a while ago. Not the big one. I won a small amount of money in the postcode lottery. Do you think I'm going off talking about it? I'm lucky too. Robins Cup winners. If they person in the Robins Cup, if I went into the Robins Cup tomorrow, right, I could sit down at that chair and go 50% my balance long. Come back, final day of the competition, close it. I could win it by doing that. And it's nothing to do with my trading skill. It's the fact that the market moved in the direction that I pressed the button in at the time. I just happened to continue moving for that week, day, fortnight, however long the Robins Cup lasts. I don't know. Don't pay any attention to it. It's nothing to do with the entry, is it? Nothing to do with the profile. It's nothing to do with what you see on your chart. It's to do with when you get out of your trades. Volume is a false indicator. Yeah, you can't use volume on forex because it's broker based. Trying to update the position POA to 1.71, but get this error. Market failed. Download product position trader EA 500. That's a server. You mentioned this, didn't you, in Discord? It's a server error. That's something for MQL5. Ask them. Error 500 basically is just a server error. It's an internal server error. So they've probably got something wrong at MQL5. If you just go to the marketplace on doesn't matter what, any old one will do. If you go and just press instead of, obviously if you bought it, you won't have this. You'll just have a download button. If you press that, that will download it from the website. I don't know. You'd need to talk to MQL5. I don't deal with any of that, unfortunately. Right, I'll leave it there today. It's 10 o'clock. Let's just have a quick look at the indices and see what's happened. FTSE stuck up here, not going anywhere. That NASDAQ chart. I was just trying to find the weekly support up there that we're sitting on, and it's because I've got the wrong chart up. So we're sitting up at this weekly level, yeah. So we're hitting a brick wall here. So order flow is quite strong at this level at the moment. So either they'll run out of sell orders and will pop, or the sell orders will win. I don't know. It's 50-50, isn't it? DAX basically hedge at the moment is just going nowhere. So we've got a nice little 3-bar reversal going on at the moment. So looking like we might come up and test this area here and get a bounce. So that's what I target to the upside. If we just sit around all day, then it's going to be just a hedge loss today. Nothing I can do with it if it ain't moving. Right, I'll leave it there. Anything you need, let me know. I'll be in Discord. So tomorrow, there's no normal stream tomorrow. We will be doing members stream tomorrow, and we will be looking at the lazy trader strategy and the testing that I've done. Next live stream, normal one, is on Wednesday, which is going to be a US session. So I'll be around at 2:30 UK on Wednesday, and we'll do a midweek analysis. So basically, one of the other reasons I want to do this week as well was because I want to look at what the fallout is on the US election. So by Wednesday afternoon in the UK, we'll have a very good idea of what has gone on in the election. So good opportunity for making money potentially at market open on Wednesday, because market open Wednesday in the US is going to be the first time the market rings the bell with what will probably be a 90% certainty result. So we could have a very big move on Wednesday afternoon. So it'd be a good one. And then back on Friday. And then Thursday for another member session. All right. So have a good day. If you need anything, I'll be in Discord. And yeah, keep your eyes peeled on this US dollar, and we'll see where it goes today. But it is either going to do the gap fill or it's not. If it doesn't, how far is it going to go? And is it going to go there by the time the elections all kick off? We'll wait and see. All right, so have a good day. I'll be in Discord. Other than that, I will see you next time.